Today in the crypto space, we see the market coming down to much lower levels. Bitcoin below the $61,000 mark, Ethereum below 2,400, and the rest of the crypto space deep in the red. We have Tau, Dog with Hat, Render, Near Protocol, Chainlink, and many others coming down to those lower levels. In today's video, I want to talk about the general market. I want to use Bitcoin as a leading indicator, but more importantly, I want to talk about one altcoin, one project that is definitely coming down to those lower levels, looking for that bounce, and that project is called ALEPHIUM. So you know what? Let's talk about the news, let's analyze the charts, and let's strategize to capitalize. Welcome to the channel. My name is Mike, and let's get right into it, guys. If you're new to the channel, welcome. On the channel, we talk about cryptocurrency, Bitcoin, Ethereum, and all the altcoins, looking for opportunities. Whether we go up or down, bearish or bullish, it doesn't matter. All we want to do is stay one step ahead of the market so that we can capitalize on any of the volatility. And if you appreciate the strategy, subscribe to the channel, click the bell so you don't miss out on any of my future videos, including the live streams at 8 p.m. EST, where we talk about crypto news and price action. Guys, if you have any projects you want me to cover here on the channel, feel free to let me know in the comment section below. You can hit me up on the socials. The links are in the description. Better yet, guys, join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. All right, guys, let's begin. Let's see what's going on here, guys. We see that the market is still coming down. Guys, we know that civil unrest, these black swan events do definitely bring negativity in the market. And we do see the sell-off, right? Market cap is down approximately 3.5% for the day. We are below the $2.3 trillion mark. But you know what, guys? We're still at 2.2. Guys, we're still at 2.2. So we still have to understand that big picture, we're still at a level of which we wanted to get to if we compare to previous weeks, right? Just previous weeks ago, we were at below the 2.1, below actually, in fact, $2 trillion. And this is one thing that we have to understand, you know, we are coming down. I understand that the negativity in the market at the current moment, the FUD, the fear, uncertainty, and the doubt does cause a sell-off. However, guys, the same way we do get reactions to the downside, we do get reactions to the upside. We do see a lot of trading volume coming to the upside, meaning that market participation is totally involved in this dip. We do see a lot of volume, and obviously everybody's in consensus. Sell-off is here. Now, I think the better question is, you know, is it here to stay? For how much longer is it going to stay, right? So we obviously got to take a look at those horizontal levels of support. Where could we potentially see a nice bounce on the market? And of course, Bitcoin is the leading indicator, guys. We're going to be looking at Bitcoin chart, and then we'll take a look at the ALEPHIUM chart. Obviously, guys, you know that I use Bitcoin as a leading indicator just to give me an idea of where the market could be heading, and ultimately where the best opportunities are to take a bit of risk for the potential bounce to the upside. Bitcoin right now is in a slight consolidation on lower time frames. I appreciate that because, of course, structure is obviously useful when trying to find an entry if we're going to start going long. And of course, we'll be talking about that in a second. BNB is rolling down. Everything's rolling down, guys. I'm not going to get into too much detail. Obviously, we'll get in much more detail tonight at 8 p.m. EST. Feel free to join the live stream tonight. We'll talk about all of these. But look at this, guys. The market is full of fear, full of uncertainty, full of doubt, based on the civil unrest. Obviously, civil unrest, you know, globally, there's a lot of global civil unrest, but the current civil unrest that we're talking about is, you know, due to the scenarios in the Middle East. And of course, we have to see what is going to be happening there. If is it going to progress or not, guys. We're not getting political here, but we are definitely keeping an eye on how the political environment, global political environment, is definitely going to affect markets in general, not just crypto. All kinds of markets, you know, the oil prices, gold prices, and of course speculative assets, risk on assets such as crypto and tech in general. All right, guys, so as you can see, a lot of rollover here, a lot of a dip, and obviously we're going to try to take advantage of these prices as best as we can. We don't want to scale in a little bit too early because you never know, it could come down further. And of course, that's the fear talking, of course, and this is why I always say, you know, in these events, don't try to play with the market. They're very hard to trade. We don't have a crystal ball to know exactly what's going to happen in the future. You know, just about 2 weeks ago, we were looking great. A week ago, a few days ago, in fact, we were doing great. Now, all of a sudden, we start rolling over. And I know a lot of the people online are going to say, I told you so, I told you so. But that's, guys, they were just lucky. Let's be real. They were just lucky. Everything in the market was currently looking very good until this happened. And obviously, now we have to have a plan of how we're going to react, right? So we got to react safely as well. And there are projects right now that don't even care about this dip, right? Mantra is doing great. Tons of strength here, not even coming down, not even flinching. We had a few others, like Phantom is still doing good, kind of going sideways and doing its thing. FTN going sideways, doing its thing. Flare getting a nice bounce, doing its thing, up 8.5%. CFX, you know, kind of still going sideways, doing its thing. So this is one thing that we have to understand, is that markets, you know, have the mind of its own. We rely on the visible hand to give us true price action. And at this current moment, we just got to make sure that we you know, consider risk management. Risk management is number one. All right, guys, I know you're here to talk about charts, so let's begin. Let's take a look at what's going on with Bitcoin. Ultimately, Bitcoin is still pushing down. You can see it's still within structure, and this structure has not broken, neither to the upside or to the downside. We have to understand that on the big picture, on the daily, on the weekly, on the 4-day, whatever larger time frame you're looking at, is pretty much the same. You can see that Bitcoin is still within the structure. Let's look at this in a little bit more detail. Really, what again, what's the most important is that we have to understand as traders, we need price action that is predictable. You know, even if it's to give us a slight edge. Obviously, we don't know the future, but predictability has a lot to do with, you know, statistical probability, and that's all it really is at the current moment. The probability of us staying within range is a lot higher than, you know, even looking for any type of breakout at this current moment, right? So as long as we're within the range, we could technically consider it a range that we could trade. Now, personally speaking, I'm not trading this range. I'm not interested. What I am interested in is, you know, trading the altcoins within this range, you know, looking at Bitcoin as a leading indicator and then finding the correct altcoin and, you know, timing the Bitcoin bounce with the altcoin bounce and then, you know, scaling in that way. But at the end of the day, we can also say that if Bitcoin's selling off based on fear, uncertainty, and doubt, we're going to notice that altcoins will take a bigger hit. And in fact, we're seeing that Bitcoin dominance is rising once again. Guys, and we'll talk about the Bitcoin dominance tonight, of course, but ultimately, this is an indication that Bitcoin currently is the asset that can withstand, you know, the volatility, especially with the FUD, a lot better than those altcoins. But let's be real here. Bitcoin is still within structure. There's nothing really to be fearful of. We are still higher than we were in all these events of the past. We were a lot lower in comparison to price, down to about 51,000 in comparison to where we are right now. And the fear is at its peak. So let's see what happens here. So what I'm trying to say is really, if this is an issue that we got to be concerned with, we need to break below the previous lows, below 51,000, or else, guys, we're still going to potentially produce a higher low here. You know, a higher low is still bullish. We created a higher high. We got to be real about that. And if we get a higher low, we're going up for another higher high. So we still okay in the sense that we are still within structure, still within the realm of possibility of a bounce. Now let's zoom in here and talk about this potential bounce. Now we are breaking below the horizontal, guys. For a good while, we were, you know, structurally supporting this horizontal line, and I'll get into lower time frames, but as we speak, we can see that we are breaking down. We are hoping to get a bounce off the 200 daily EMA. That is also very possible, but again, if things escalate from the you know, the political environment, global political environment escalates, guys, it's not looking good for risk on assets such as Bitcoin and these altcoins. Okay, so let's just keep this in mind. The 200 daily EMA is pretty much our last line in the sand at the current moment for support. If we break below, it could be that we're going to be taking, you know, the elevator straight down to much lower levels. So be careful there, guys, and also be careful with the shorts as well, because, you know, the majority of you know, we can see that we've came down significantly already, number one, and number two, we don't know if we're going to get a quick reversal in this market, getting support at any moment. Every time we do get such dips, they get bought up real quick, and history has proven that. Let's move on. Let's go to the 4 hour. You can see that little structure that I'm talking about currently. You can see that we're dipping. We kind of respected this horizontal for many 4 hour candles. 1, 2, 3, 4, 5, 6 4 hour candles, you know, respecting this horizontal that I had in here for a long while. So we still okay. Like if we get a bounce right now, You see that we wick there below before. As long as we don't break below that wick, we're still okay. But guys, I'm not willing to bet on it at this current moment at all. You know, the continuation to the downside is very possible, and a bounce is still very possible, but I'm not willing to bet. I'm not willing to take my chances. Let it happen. Let it see what happens. The dip, personally speaking, is not enough for me to consider, you know, buying at this moment, personally. But of course, if you're on the sidelines and you want to take advantage of a 9% dip on Bitcoin, sure, go right ahead. But look at those altcoins. Some of them have been coming down a lot more than Bitcoin. Okay, guys, so just keep in mind this is the case. I do want to take a look at some volume. The volume is not even that much. Let's be real. I'm even looking at the 4 hour, that we got more sell pressure into this dip than we do have in this dip. Okay, so look at this sell pressure, so much more sell pressure into here than we've gotten right into here. I'm not that concerned just yet. Of course, I'm not willing to act upon it. I'm just willing to keep it in mind that Bitcoin is okay still. All right, let's move on. Let's take a look at ALEPHIUM, guys. I know, you know, ALEPHIUM also, like many other altcoins, have been coming down. In fact, invalidating a lot of bullishness that we've been presented in the last little while. ALEPHIUM, you know, Tectum, Mint Layer, many others. So many good projects out there that have been, you know, tradable. We've been trading these altcoins for a good while, and they've been very profitable at the end of the day, getting in, getting out, trading the 4 hour, trading the hourly, trading even the daily, and doing very well. But as you can see, a lot of the bullishness slowly is being tested. Now, if we kind of zoom in here, you can see that ultimately this diagonal support line, you guys know I don't like diagonals, but I did slap one in to say, you know what, it would be nice to see some sort of consolidation, and I still feel like that's could have been possible, given if the events of the world didn't happen. It could have been that we were still in range. I believe that this was induced by FUD again, and the last time things were induced by FUD was this right here. Okay, so let's keep that in mind. FUD, this was the Japanese FUD, you know, based on, you know, the interest rates and all that, you know, the market, you know, issues that Japan caused globally. Then all of a sudden got straight bought up and straight to the top, to the upside. Now, do we come down again and, you know, potentially, you know, hunt more liquidity, people getting overly bullish? Could this just have been a deleveraging event where we could get a lot of people, you know, out of the market, maybe get a lot of people wrecked, just basically being able to hunt liquidity to, you know, provide liquidity to the market, essentially. This could be it. Now, I'm going to be honest with you guys. I know this might, based on the current events, I know it might sound a little bit out there, but to be honest, this is the best time to DCA. It's the best time. Why? Because your invalidation is super clear. If you notice that we're back at this horizontal, every time we got to this level, we've gotten some bullish response. Here, and obviously even in the past right here, bullish response, and bullish response, and do we get another? Now, of course, we know our invalidations. As soon as we start breaking down here with a good amount of volume, you know, this starts to become a level of which, you know, it could be a level that we start getting out, because ultimately if we come down, the next level, the ultimate level is this bottom right here. Okay, so what I'm trying to say is anywhere between where we are right now and this bottom is a level of which you could expect a higher low. If we do not make a higher low, guys, get out. It could be that ALEPHIUM comes down for a lower low, and we do not know how low it's going to go. But I still remain bullish as long as we are above this low right here. So I have no choice but to say, look, my convictions are there. I still like the fundamentals on ALEPHIUM. I am currently not buying any at all ALEPHIUM, but if we do fall within this level right here and within this zone, I may consider dabbling in and increasing my position size if we do get structure. And for me, that's very important. Structure is important. Technically speaking, we are forming a bit of structure because we are bouncing. We are bouncing on this level. We could get a quick buy up and, you know, get to the top of the range. You could de-risk at that point, take some profit, let it come back down if it's going to happen. But at this point, if we do not hold support, I'm going to commit to some sort of buy order when we produce some structure. And what I mean by that is let it come down, and let's get some sort of consolidation. Who knows what it is? You know, some sort of structure. It could be inverse head and shoulders, cup and handles, Adam and Eve patterns. Let's get some bullish diversion. Let's get some indication that the market is holding some support, because ultimately this is the optimal stop loss area. This is where you want to put your stop loss, because if we break below this potential, structure that we do get maybe in this area, that is where I want to be putting my stop loss, which is right down here, very close to invalidation, and obviously not risking too much of my position size towards the downside. I want to be able to cut myself off real quick. So this is where we're at. It's about when you take risk. Right now, it's not bad to take a bit of risk, especially if you're on the sidelines. You would be getting decent entries in comparison to others that are looking for entries or of the past. You're looking at breakout zones, you're looking at good zones, and obviously within this yellow box. Now, if we get into lower time frames, actually, you know what? Let's get the oscillators going here for a second. We're not even completely oversold. That's another concern. And I'm showing you these expansion waves based on the fact that over time, we were slowly expanding to the upside. Now, it's still the case. Like, even if you look at this red expansion right here, just keep in mind that, the civil unrest of the world did cause a lot of this, and it's still not even that strong in comparison to this. Let's be real. It's not even that strong, not even that strong as this, pretty much. Like, it's pretty much equal, and it's not even that bad. So we're okay still. My major concern is what happens when we get oversold. When the purple line gets below the 30% mark, that's what's my major concern. And that could bring it down to the bottoms once again for that double bottom. Double bottoms are also good. I know I was talking about breakouts. I was talking about inverse head and shoulders, and sometimes they get invalidated because of certain events like this. But we still maintain structural support based on a double bottom structure if we do come down here, which you may want to take another, position. You may want to buy a little bit more and get your average position down a little bit further. So if you look at the current buy scenario, it's still not bad, but you could stop yourself out or just buy a small bag here and double down, triple down here. That way your average position is somewhere in the middle. And then when we do recover, you're in the green. However, just understand that the last line in the sand, literally big picture, is this bottom, because you're looking at last line in the sand structure right here for this little area. But what about this bottom right here? This is where it's like things get really bad, right? Down below $1 psychological level, nice round number. Below $1, things get really bad. Now, it's not going to be just ALEPHIUM. Like, I know I'm saying if it does come down, it's bad for ALEPHIUM, yes, but think about what's going to happen to the rest of the market if that's the case. We're going to see a lot of altcoins come down significantly if it does come down to this, if ALEPHIUM comes down here. Okay, so it's not just ALEPHIUM, right? So what we also have to consider is the momentum. Again, if it gets oversold, it's not a good look. We already see volatility oversold, and if momentum gets oversold, it's not a good look. So let's clean this up a little bit, and let's look at the trend oscillator. You can see that it is facing to the upside. I do see the expansion still getting smaller, guys, and I just want to bring it to your attention that the current expansion right here, the current dip or the current move to the downside, look at the expansion, look how weak it is, right? And I know a lot of these indicators, guys, I'm just going to be clear, because I've been hearing a lot of people on socials talk about indicators and how there's some of the indicators are not lagging indicators in the sense that they are able to tell the future. That is absolutely false. All indicators are lagging indicators. No indicator is forward looking whatsoever. So what we have to understand is that we got to wait for the price action to kind of unfold so that the indicators kind of give you the signal. Now, the signals are, on the other hand, could be forward indicators, could be instead of lagging, it's a little bit forward. But at the end of the day, they're all lagging indicators, including, this momentum indicator, the trend indicator. At the end of the day, though, it is giving us a good sign that there's not a lot of strength in the move to the downside. Unfortunately, we are seeing EMAs facing down, red histogram bars to the downside, but it's still not that strong in comparison to previous moves to the downside. That's one thing that we need to consider. So some people may argue, you know what, it was kind of due anyway, based on what we can see, based on the oscillators. Maybe it was already due for, the market to dip and, altcoins to take a hit. But at least now we can say, you know what, maybe this is the last shakeout before altcoin season. It could happen. It could be the case. And it could be that, black swan events are just the catalyst to get it there in quicker. Just get it to where it needs to go, like a band-aid. Let's hunt some liquidity for the last move. Let's deleverage the market and then get going. It could be the case, guys, and ALEPHIUM is at this point where it's literally trying its best to hold horizontal support. If it doesn't hold, guys, be prepared to DCA in this level, and if it breaks below this level, you got to get out. There's no more for holding, and this is not just for ALEPHIUM, it's for any other projects out there. You don't want to be holding into dip discovery. All right, guys, if I've offered you any value in this video, do the channel a massive favor, slap the like button. It does really help out with the algorithm. If you want to follow me on the socials, the links are in the description below. Feel free to join the Discord. The Discord is where it's at. Lots of good alpha, trade setups, fundamentals, and learning material. The best part is it's absolutely free. Take care, guys. Have a good one, and don't forget, buy the dip.